Good afternoon, everybody. Welcome back to the Opportunistic Trader. As I mentioned before, we're joined by the Standard Grains Joe Vaklovic. Joe's been joining us for a few months now, going over the ag market. He does a great job each morning, and he's well connected, has a lot of insight. So it's always great to speak to him. Joe, how are you?
Doing good. How are you?
I'm good. I'm good. A lot of activity going on. Ags, as we've been speaking about, it had a really active few months. I guess the months of more April to June, and then things have calmed down a bit where we are here. Soybeans. I got November soybeans at 842, Dees wheat at 527, and Dees corn at 360. What's going on? What are you hearing these days?
Well, we've actually had an interesting last few sessions here. The corn market, the soybean market, and also the wheat market both posted in corn and soybeans contract lows, and in wheat some multi-week lows early last week. We then saw a rebound, and I would say that generally speaking, the market is holding these gains here fairly well for the moment. This is the time of year in the corn and soybean markets when you can expect or start to look for some sort of seasonal bottom. It's very normal for those two markets, corn and soybeans, to trend lower really through the second part of summer, through starting with July typically, and trending lower through August through September, and you usually find your bottom around October 1st. And this year is setting up for something like that. We've had the seasonal move lower through the last couple months of summer and through September. So we very easily could have posted harvest lows in those markets last week. And if we didn't, if we make one more run to the downside, I still think we're probably fairly close. So this is a time of year where things generally start to shift gears a little bit from bear market into recovery mode.
Yeah, well, looking at it, actually, I just pulled up the daily charts for everybody to see. And as you pointed out, the past 6 or 7 trading days, we actually have had a nice bounce. I guess we had the USDA data about 10 days ago or in that ballpark, and, we traded lower and decent bounces here. So you're generally pretty supportive?
I am big picture, yes. From these prices, I am overall friendly. When you look at the last, I know we've got a lot of noise here. We've got this U.S.-China trade dispute, which is ongoing, and it's been a negative factor. We've got big crops this year, which is not really anything new. We've had big crops every year for the last few years, but I just try to big picture here. And you look at the last 10 years. Corn at 340, 350, 360 is kind of toward the lower end of the range. Soybeans with an 8 in front of them are certainly toward the lower end of what we've seen here during the last several years. So I'm not going to try to overcomplicate things here. I mean, I know that there's downside risk associated with this trade war, and that we've probably still got risk to our demand base in the beans because of the lack of China. But I think in the grand scheme of things here, you got to look at where we've been, and these are very low prices relative to what we're used to.
Yeah, well, on that, don't you get the sense that the technology is so dynamic these days that we're going to have optimal crop yields for years to come, barring significant weather issues?
Well, yeah, I mean, there's been massive improvement in the genetics of the seed varieties that are planted. There's been massive improvement in the way that farmers are able to produce crops, from everything from GPS and tractors to all sorts of crazy stuff that we didn't have just a few years ago even. So I mean, the U.S. farmer is incredibly efficient, and the way the seed varieties are set up, we can withstand adverse weather conditions to a certain degree. Now there will be a year again, and it could be next year. I don't know when it's going to be, but there will be a year again where we have below trend yields because of a weather issue. We just haven't had one in a while. I mean, we've had some isolated problems here and there. We haven't had a drought since 2012. We haven't had a year with overly excessive moisture, overly excessive heat. So, when you get a year with no major problems, you're going to end up with big crops given the ability that these farmers have.
Yeah, yeah, that makes sense. So what are traders talking about right now? What's a popular trade that a lot of ag people have on right now?
Popular. Well, if you look at the money managers, I mean, they're pretty much short. I mean, they're short corn pretty heavily. They're short soybeans to a lesser extent, and they're closer to flat, the wheat market. Um, I think that, if you're a speculator, you you don't want to fight the trend too hard, but you probably want to be prepared for some sort of rally between now and the end of the year. That would just be very, very typical. There's been a lot of discussion about the soybean market and what's possible in terms of demand. Um, it, there was a lot of talk last week about Argentina buying beans and then shipping them to China in kind of an arbitrage deal. If that's the truth and that's what's going on, you may have very well seen your bottom in the bean market last week. That headline or that chatter might have put a bottom in. If that turns out to be unfounded and China can really avoid U.S. beans the way that they say that they can, you've probably got another leg down in that market. But that's something I think the market's watching very, very closely right now.
Yeah, absolutely. As we pointed out, corn, wheat. Actually, wheat's been pretty volatile. Traded up to about 620. Now we're down to $5. Now here we're at 520. But it seems like we had a really active, I guess Q2, Q3. I guess on a lot of the trade worries and high yield. Are we expecting? When are you expecting more news regarding clarity on trade that might be affecting the ag market?
Well, that's like the $1 million question here. I mean, if we were to somehow reach a deal with China on this trade dispute, you would see a massive rally in these markets, in my opinion. I think just the headline itself would force a lot of shorts out of the market, which would result in a big 2 or 3 day increase, and then we'd have to re-examine what we know about the fundamentals here. But it's just China's such a wild card, and it's so difficult to understand exactly what they're thinking. We see the rhetoric on the news wires every morning. China's not going to bow down to the U.S. and the U.S. is a trade bully and all this talk, but the Chinese economy and is having problems here. Stock market's under pressure. Their currency's under pressure. There's reason to believe that it's going to get worse. A lot of economists believe that if this trade war continues, it's going to have an effect throughout the global economy. But for now, I think it is having an impact in China. So, does China care about their stock market? Do they seek a recovery here? I don't know, and that's really the $1 million question. I mean, if I knew that there was going to be a U.S. China trade deal tomorrow, I mean, I'd be long beans and I'd be long a lot of them. But you don't know.
Yeah, and then I guess another big political thing coming up is the midterm elections. That's always the farmers in the ag market is always a hot topic because there are a lot of jobs at stake. So I guess we'll keep an eye on that. Is there any sort of have you heard much on the political side? Any key races?
Well, I'll tell you that I think in my career, which is shorter than a lot of people's career, politics have played a more important role this year than ever, obviously. Over the last 15 years, the fact that we've got a president who's starting trade wars, the fact that we've got such a divide between the two sides politically. I mean, there's a lot going on here in politics that could drive trade, which could drive markets. I mean, I think there was an opinion that that Trump would get something done with China before the midterms in any case, because he knows what the midterms mean to his administration, to his legacy, all that stuff. But is he going to do that? I don't know. But it's such a big driver of prices. It's really difficult to navigate. It makes it more difficult to navigate than ever, because you've always got this uncertainty regarding politics and how the politics relate to trade kind of just hanging over the whole thing.
Yeah, it'll definitely be interesting. And, I asked you a question before, like, timetable on different things. That's all the markets are kind of looking, and nobody has a clue on what's happening here with China and timetable. There were some Axios articles just last night that basically said that the Trump administration is going to start to go after China on election manipulation and a lot of things that basically the administration has been talking about Russia for months and years and years now. So there's a lot of things at stake here. What about on the ag side? Have you seen a correlation with the dollar, or has that tapered off, or anything to watch?
Well, so a lot of people will watch the U.S. dollar index. which is a basket of or a basket of currencies that's most heavily weighted toward the euro. Uh, the currencies that actually matter the most for corn and soybeans, at least, would be the South American currencies like your Argentina currency, your Brazilian currency, and those currencies have just collapsed basically versus the dollar, which is a negative for us and a positive for growers down there. Makes us less competitive on the global market. In regard to wheat, it's a little bit different. Our competitors on the global export market, and the reason why the currencies matter for grains is generally because of exports. I mean, it's a sentiment thing, but it'll affect the export structure, which affects supply and demand, which affects the markets. So South America is our big competition on the export market when it comes to corn and soybeans. When it comes to wheat, Russia, the Black Sea region, Australia, those are our bigger competitors. So we've got a different group of currencies that you've got to watch when you're talking about currency action and how it relates to the wheat market. So when we're talking about grains, the dollar index, the EDX, the one that everybody follows, isn't necessarily the make or break. I mean, it does drive money flow. And if you're a money manager and you see the strong dollar, it may steer you away from the long side of some of these markets. But as far as actual supply and demand goes, it's more country specific. I think it's the countries of our competitors on the export market that really kind of drives the supply demand situation.
Yeah. And what about the RIN market and ethanols and ethanol? I know RINs are basically trading at multi-year lows here. A lot of political talk that's moving that as well. How's that affecting corn? If you've kind of heard much about that.
Yeah, I mean, you hear stuff about ethanol and ethanol production. The bottom line here is that the ethanol grind, ethanol production has been very strong. We're grinding a ton of corn for ethanol, and the projection is that I think we're going to use a record amount of corn for ethanol during this 18-19 market year. There's a lot of stuff, and this goes back to politics again. I mean, Trump administration has been generally supportive of ethanol. You've got an oil lobby that is generally anti-ethanol. As far as RIN prices, I mean, day to day, I don't think that affects the corn market. If we were to get into a situation where ethanol margins, really deteriorate, and we've actually seen a little bit of that, and the ethanol grind were to really slow down, that would be a problem. But I don't think it affects the day-to-day stuff. It's more of a bigger deal, and that's one of the bright spots in our demand base for corn is ethanol, and really all the demand is bright. I mean, exports are fantastic, feed usage is fantastic, ethanol usage is fantastic. We just got too much corn. We've had too many good years of production.
Yeah, I'm actually bringing up a chart right now of ethanol. I haven't really looked at it, I gotta say, but I want to say, yeah, I mean, it looks completely different than anything oil related. So it looks like it's typically there's a correlation with ethanol and somewhere between corn and oil, but it looks complete. If anything, it's being dragged down. It looks like more with corn prices, because it looks nothing like energy prices, which have been going higher and are basically cruise at the highest point of the year right now.
Yeah, ethanol production margins are not very good right now. You've got some areas of the Western Corn Belt where they've actually got negative production margins, I believe. It's just a story. I think it was last week that Green Plains, which is a big ethanol producer in the U.S., had halted production at 2 or 3 plants throughout Iowa and Minnesota. So that's not necessarily a good sign. I don't think anybody's overly worried about the future of ethanol right now. But yeah, it's definitely something to keep an eye
The
on.
oil guys have got to want to put as much ethanol in the tank as possible when they got ethanol prices where they are versus where oil prices where they are.
Well, you would think so, and maybe that's why we maintain a strong ethanol grind despite margins that aren't really that great.
Yeah, that's definitely the
Just
interesting
one piece
dynamic
of the
there.
puzzle for them.
Yeah, absolutely. So what's it going to take to get a big move in ags here? Obviously, we talked about it sounds like a development out of China, maybe something political with the midterms. Anything else?
If I had to guess, I mean, I never know why the market's going to move, but I would guess that we find a reason to rally the corn and soybean markets at least between now and the end of the year. I don't know what the reason's going to be. I don't know if it's going to be currency related or trade related. I just think we'll find some sort of reason. We usually do. Every year is different. There's always a different reason for the move. Maybe it's demand. Maybe Argentina starts buying a whole bunch of beans to sell to China. I mean, I don't know what it's going to be, But I would imagine, given prices where they are, and given the seasonal tendencies of this market, which we followed very closely for the last several weeks, several months, really, I just think we're going to find a reason to rally these markets. Now, have the lows been posted? I'm not sure about that. Timing is always very difficult, but it's possible. It's possible. The action in the market the last 4 or 5 days is convincing enough that to make that assumption or to think that is not crazy.
Yeah. All right. Well, hey, thanks a lot, Joe. Thanks for taking the time. Joe Vaclavic of Standard Grain giving us some great info on the ag market. Thanks as always, Joe.
Thank you.
All right. Talk to you later.